Hi there, welcome to Kneppy Invest. It is February half-year reporting season, or for some companies, full-year reporting season. Have seen a few of those released, but I always look forward to reading some companies' half-year or full-year report. And one of those companies I was looking forward to reading how they have progressed in the past 6 months was A2 Milk, because the share price is in an uptrend and is still in an uptrend, even though the market has reacted negatively to these results. Last time we looked, the share price was down 8%, but fairly interesting trading today because this company is also listed on the New Zealand Stock Exchange and they opened earlier than the ASX. And initially, A2 Milk was up in New Zealand. So the first thoughts from New Zealanders who read A2 Milk's report was positive. And as soon as the ASX opened, we saw a massive dive in A2 Milk shares or share price on the New Zealand Stock Exchange. So they just followed our negativity. So in today's video, I'm going to go through their financial statements. So if you don't like looking at financial statements, this may not be the video for you. And also try to look and find out why, or figure out why, the market has reacted negatively to the half-year results for this company. The first thing I always look at is any sort of a really brief picture of how the company has done in terms of revenue and profit. And it looks good on first glance because revenue up 18.6%. That's exactly the sort of growth you want to see compared to the previous corresponding period, and a profit up 23.7%. So if you just looked at those two numbers, those two increases in revenue and profit, you might think that the market will be excited by these results. The other thing you have to take into account as well is whether these numbers beat expectations, and they were actually in line with the company's expectations. So the very fact that these numbers were in line with companies' expectations is not the reason why the market, particularly in Australia, among Australian investors, have sold off on A2 Milk shares. So let's have a look at the financial statements to see if there's any skeletons in the closet for A2 Milk. Typically, I always start at the cash flow statement and work my way back. If I only had to look at one financial statement, it would be the cash flow statement. But there are some problems with the cash flow statement, in particular when it comes to changes in working capital. And you can see the changes in working capital in note 12. Now, the way Australian companies set out their cash flow statement is a little bit different than American companies. And in the American company accounting standard ways, you can actually see changes in working capital in the statement of cash flows. So sometimes I do wish Australian companies have similar or had similar statement of cash flows than American companies, but I am rambling on a little bit here. So there are a few things I look for here. Receipts of customers, which should be fairly similar to revenue, never identical, but should be fairly similar. And the company did see growth in receipts. The next thing I look at is whether the company is operating or operating cash flow negative or positive. And the reason I said negative in this case first is because for the first half of financial year 23, A2 Milk was actually operating cash flow negative by about 3.2 million. 1 year ago, they were operating cash flow positive by 98.4 million. Now, you also can look at the free cash flow. So you take the operating cash flow and then minus the payments for property, plant, and equipment. So A2 Milk was actually free cash flow negative by $9.3 million. So I do know some investors who probably put 90% of their thought when they research a company into the cash flow statement. And it is a dangerous endeavor doing that simply because you're not taking into account changes in working capital. And we'll have a look at note 12, which does show us the changes in working capital. So there could be the instance where this company has simply expanded or increased their inventory by a significant amount. That has happened to quite a few companies over the past few years, increasing their inventory levels higher than they usually would because of supply chain issues. So that could be a reason for A2 Milk. There could be some other changes in working capital in regards to receivables, payables, or something else that could explain why this company was operating cash flow and free cash flow negative. And also, I like to have a quick look at investing and financing activities just to see if there's some unusual numbers in there. For instance, A2 Milk received $150,000. Actually, it's $100,000 from term deposits. But if we go to the financing activities, they spent $90.3 million on share buybacks during the half year. And that meant the cash on hand actually fell by a fair bit. So the cash and short-term deposits at the end of the period was $427.2 million, which is a little bit different than the cash they actually will show in the balance sheet, which I'll show you in the next slide. After I have had a look at the cash flow statement, I usually take a much quicker time to go over the balance sheet. And there's a couple of things I'm looking at here. And the main things I'm looking at here is borrowings and also the total equity, which is right at the bottom. I mentioned in the previous slide that if you look at the cash flow statement, the cash on hand was something like 470 million. But if you look at the balance sheet, cash and term deposits was 777.2 million. So I won't go into any detail why there's a big difference between those two, but that's something I am going to have a closer look at in later days. But anyway, the main thing here is the company does have a little bit of borrowings going on here. So current liabilities, $40 million in loans and borrowings and $66.2 million in non-current liabilities. But this company simply has way more cash than they do have in terms of borrowings. So loans and borrowings is not a concern for this company. And total equity increased slightly from 1.193 billion to 1.204 billion. So typically, I do like to see the total equity rise through time. That's a good sign for the company. And a lot of investors, one of the metrics they do look at is return on equity, and that's how they get their equity number is at the bottom line of the balance sheet with 1.2 billion. So to calculate the return on equity, you just look at the earnings or profit this company has made and divide it by the total equity, hence return on equity. After the balance sheet, there's only one place I can go, and that is a profit and loss statement. And I take a quick look at the balance sheet, but I'll definitely take a longer look at the profit and loss statement. And there's a few things I want to look at here. And in fact, for A2 Milk, I've divided the profit and loss statement into two sections. This first section here is probably the most important section, but I just wanted to show you the second section as well because there was some interesting stuff happening in that. But the main things to look at are in this first little section. So I'll start at the top, which is sales or revenue. And the second thing I look at is cost of sales to get the gross profit. And gross profit is very important, particularly how gross profit or gross margins change through time. So ideally, you want to see gross margins increasing through time if they're not stable, because that is telling you that the competitive advantage a company has is being maintained. But if you do see gross margins increasing, it is possibly telling you that there is some sort of moat or competitive advantage a company has. It could be a brand, and that would be applicable for A2 Milk. If more people become aware of A2 Milk and would pay a premium for A2 Milk liquid milk or their infant formula, that could be showing up in increasing gross margins. So that's one thing I look at is how gross margins change through time. But the gross profits for A2 Milk in this particular half year were $371.9 million. And then go through all these other expenses. For instance, marketing expenses, a fairly big increase in that section from 92.5 to 135 million. Administration expenses up from 51 million to 63 million. Then we get to operating profit. And operating profit has increased from last year, about a 10% increase from last year, from 89 million to just under 99 million. And it's really interesting, just below operating profit, we see interest. For most companies, it's interest paid because they have debt. For A2 Milk, it's interest received because they have a lot of cash. And increasing interest rate environment, A2 Milk received $12.1 million in interest in the half year compared to $1.7 million last year. So that's the benefit of having a lot of cash on hand. You do get extra income. And that actually does benefit the bottom line, which is the profit for the period. It has increased that during the half year by a fair bit, by about $10 million. The next thing to look at is income tax expenses. So increase from last year, 34.4 million up to 40.2 million. So altogether, the profit for the period was 68.4 million. But you also have to take into account non-controlling interest, which was negative 5.3 million. So if you add back that non-controlling interest to the profit of a period, you get profit for the period for the owners of a company, which is $73.8 million, which was higher than last year, $59.6 million. But if you take away that interest income, it's not as great of an increase as you might expect. So that interest income received because of high interest rates has led to a significant benefit for A2 Milk in terms of their profit for the period. And in the second section of the profit and loss statement, there is something interesting here because that profit is not the end of the story. They also received some other income, which they actually do refer to income. But in what I've seen in their presentation and their media release, the profit they're referring to was that profit number in the last slide. If you take into account the other income, which is non-recurring, their actually income or profit for the half year was a little bit higher. For instance, there was a loss in terms of foreign currency translation, 9.8 million, but through cash flow hedges, they had a benefit of 15.5 million, and there was a listed investment fair value profit of 17.8 million. They have an investment in Synlait Milk, and the valuation of that investment has increased in the past half year. So the share price or the valuation of that company has increased. And when that happens, the fair value of that investment changes, it goes up. And that has seen a fairly significant benefit for A2 Milk in the past half year in terms of how that investment is valued. And that's why the total other comprehensive income is at 23.5 million. And if you look at the total comprehensive income, overall, it's at $91.9 million, which is significantly higher than the profit they reported. But it's good that they have separated these non-recurring items. Now, that earnings per share might be based off this total comprehensive income. So don't look at the earnings per share unless it is based off the profit that we saw in the previous slide, because I don't believe you should include these non-recurring items when you do calculate the earnings per share. Now on to note 12, and this is one of the notes I religiously take a look at whenever I'm looking at financial statements, particularly for those companies where there is a significant difference between the profit and the cash outflow inflow from operating activities. And for A2 Milk, in this particular half year, there was a big difference, just like there was a big difference last year, but the big difference last year was on the complete opposite side or way to this year. So last year, they reported a profit of 56.1 million, yet their operating activities had a cash inflow of 98.4 million. This year, it's complete opposite. Profit for the period was 68.5 million, so they're not including non-controlling interest, but their company had an operating cash outflow of 3.2 million. So why is there a significant difference between the profit and operating cash flow? And it can be found in this particular note, reconciliation of the profit to the operating activities cash flow. So it's separated into two little sections here. The first section is adjustments for non-cash items, which is like depreciation and amortization. Most companies have that. Not all companies have share-based payment. But for A2 Milk, those two amounted to about $17 million. There's also small changes or adjustments in terms of net foreign exchange gains in income tax on hedges. But typically, the reason why there is going to be a significant difference between profit and operating cash flow is found in changes in working capital. So this is mostly, for most companies, receivables, inventories, and payables. A2 Milk has another category here called prepayments. And there is significant changes in working capital in this particular half year, which has driven the operating cash flow into negative. And those reasons are inventories. Inventories increased by $41.9 million in this half year. So for some reason, A2 Milk have decided they need to increase their inventories. Maybe they're expecting more business in the future. That's a definite possibility, but that could lead to problems, because if that demand doesn't come through, they're going to have an excess supply of inventory. Also, prepayments up 39.9 million. So combined, prepayments and inventories are a cash outflow of about $80 million. Not only that, trade and other payables actually went down 27.3 million. And so if trade and other payables go down, that's also a cash inflow. They could have decided not to pay some of those payables. So if they decided not to pay $27.3 million of those payables, this company would have been cash flow positive by about $24 million. Now, the other thing I always look at here is trade and other receivables. But trade and other receivables actually went up by 4.8 million. And that's actually a cash inflow. So that was beneficial to the operating cash flow, but not by much. So those are the main reasons. Changes in working capital, why there is a significant difference between the profit reported and the operating cash flow. And to be honest with you, because two of those significant differences are prepayments and inventories, I'm not concerned. The only reason I might be concerned is if I think they've spent too much money on inventory and they're going to have trouble selling that inventory, and then eventually they're going to have to sell that inventory at a discount. That would be leading to some problems. And we have seen that problem in other companies over the past few years. Now, one reason why the market might react negatively or even positively to a company's half-year or full-year results is any sort of outlook the company gives. So this is their outlook, and to be honest with you, nothing too negative within this particular outlook. Still expecting low double-digit revenue growth for financial year 23, with good growth in China and also USA liquid milk, and really nothing to explain why the share price might or why the market might be reacting negatively to A2 milk. Gross margin percentage is expected to be slightly higher than financial year 22. EBITDA expected to grow in financial year 23, and EBITDA margin expected to be similar in financial year 22. But they do expect cash conversion in financial year 23 to be significantly lower than financial year 22 due to reversal of working capital timing benefits in financial year 22 and higher working capital related to China label transition. So nothing really in the outlook that can explain the negative reaction from the market. Now to my thoughts of A2 Milk's half-year report. Results were okay. Now, they could have been better, and their reported profit. Now, I was okay with their revenue, up 18%. That's good. That's one thing I look at is nice increases in revenue. But the reported profit increase of about 23% was highly influenced by that increase in interest received because they have so much cash on hand. So remember last year, they received about $1.5 million in interest. This year, it was like $12 million. So there was a $10 million benefit from high interest rates. So that did have a significant benefit on the profit that company did report. So in my opinion, the profit they reported was not quite as good as what they did report to the market. I don't think that's why the market has reacted negatively to A2 Milk's half-year report. Maybe the market is unsure about the future of this company because of their obsession with China. And this is one thing I am unsure about A2 Milk right now, is why they are so obsessed with China. And there's two main reasons why I don't know and I'm a bit wary about their obsession with China. The first one is the political state of China right now. They're very unreliable, very unpredictable. Tomorrow, the Chinese government could ban A2 Milk selling their infant formula into China just like that. And instantly, the share price of A2 Milk will drop 80% because it is such a huge market, a growing market for A2 Milk. But when I say growing market, they are taking more market share. But there is a changing demographics in China right now. And that changing demographics involves children being born. Children being born in China is dropping at a massive rate. They actually included this in their presentation. How fewer children are being born now, this year or last year than the previous 3 or 4 years. It is dropping. Now, you could argue there could be a little bit of bounce in children being born because China is opening up, but they are having less children, just like most Western countries. They just don't need more children. And this is going to be a phenomenon around the world over the next few decades, where as countries become more educated, as women become more educated, we're going to see less children born. And that's happening in China right now. So with that changing demographics, with less children being born, the market for infant formula is going to go down. We're already seeing going down right now. So unless A2 milk increase their market share, significantly increase their market share, I don't see a significant increasing addressable market for A2 milk in terms of their state in China. So that's another reason why I'm unsure why they are so obsessed with China. If the amount of children being born in China was increasing at a significant rate, I could understand that. But this changing demographics has me unsure about A2 milk's approach in China right now. And I really prefer the Treasury wines approach. So when China banned Australian wine from being sold in China, Treasury Wines needed to change their approach. So they decided to become more global because they also were focusing, won't say obsessed, but they were focusing on selling their wine to the growing middle class and upper class in China. And then they had to change their approach. And I think their approach is starting to pay benefits. So that's one thing I would like to say A2 Milk do. Just not concentrate and obsess over China. Try to have a world picture. Now, they are selling their liquid milk into United States. And I think they did get some approval to sell the infant formula into United States as well. But I just wish at this point in time, A2 milk was more global in focus. But in saying all that, the market has really liked A2 milk over the past, we'll say, 8 or 9 months. Share price reached low of about $3 way back in May last year, and that was the low. And then the share price has moved into an uptrend. And even though the share price was down, at the time I took this little image of 7.9% on the 20th of February, the share price is still in an uptrend because the share price has increased from about $3 to a high of $7.10. But it does look like that sort of range between $7 and $7.10 is a resistance level because the share price has really struggled to get above that level over the past 2 or 3 months. So if we do see the share price get above $7 and say 20 cents for A2 milk, that would be a very bullish move. So I'm not bearish on A2 milk right now just by looking at chart, because even though this is a big downside, I do think the market has overreacted to a certain extent, and it wouldn't be surprised to see a share price bounce in the next few days. Doesn't mean it will happen, but it wouldn't be surprising if it did. That's all I have for this video looking at A2 Milk's half-year report for financial year 23. If you totally disagree with anything I have said in this video, I love to hear your reasoning behind your disagreements, because that's how we learn as people and investors, is by listening to other people's different opinions. Doesn't mean we have to take on board those different opinions, but that is how we learn and grow as investors. So if you do have a different opinion, I'd love to hear it. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.